Hi, this is Andy Filipiuk in Toronto for the week of February the 11th. Financial markets continue to drift higher, recovering from the massive sell-off we saw at the end of last year. One of the possibilities is the trade deal with China possibly getting done in the next couple of weeks, as well as the government shutdown in the US. So these are a couple of reasons why markets might be happy. However, I've been examining the data that's been coming out globally, and what we're seeing is disinflation or deflation. In Japan and India, their inflation rates have dropped quite a bit in the last couple of months. In Australia, we're seeing a large housing market sell-off, which is similar to our markets in terms of they were a very large bubble in Australia. And even here in Canada, I saw the Terranet data this morning showing that month over month in Canada, housing prices dropped 0.1%. So this is troubling for central banks. In the short run, it's great. That means they don't have to raise rates because there's no inflationary fears. But what it does say is that their policies really aren't working. They need to create inflation to get us out of this economic malaise. And so after $15 trillion of printed money, it looks like we're going into a disinflation or deflationary period, which means the only way out is to print even more money. And in all likelihood, we're going to see a plan within the next 12 months as to how central banks are going to deal with things going forward. But all in all, the economic data continues to deteriorate. And I remind viewers that sell-offs are a process. They just don't go down and stop. There's a whole process, psychological, economic, et cetera, et cetera. So I believe we're in the early stages here, and it's best to stay cautious. Thanks for watching.